Welcome to the Duncan Duo Radio Show, hosted by Andrew Duncan, the official real estate agents of the Tampa Bay Lightning. As Tampa Bay's top-selling real estate team with over $3 billion in sales and thousands of homes closed. Sell your home with ease, guaranteed in 14 days or they'll buy it. Visit theduncanduo.com. Here's your host, Andrew Duncan.
Happy Sunday, Tampa Bay. Just want to jump right into content today, talking about the real estate market like we do every Sunday here on WFLA News. A lot of stuff happening in politics this week that have a massive impact on real estate. So I want to break it all down for you and help you understand what that means in Tampa, in your neighborhood, in your real estate market. First and foremost, interest rates have hit basically a several-year low prior to the attack, between America, Israel, and Iran. They're going to kind of bob up and down. They're going to be a little bit volatile for a period of time. Anytime there's conflict or war or bombings, any of those things cause bond yields to just be really volatile. So you see some swinging back up and down depending on what the president says and what likely resolution is, or if there's a ceasefire. But first and foremost, that's the story with the real estate market right now. Rates are at a several-year low, and it's a great opportunity for home buyers to take advantage of that. I feel like right now it's kind of like if you monitor the financial markets at all, you understand that the markets move on information. Okay, so stock markets, for example, the crypto markets. Real estate also does that same thing, but it's much, much slower. So, for example, a Fed rate cut. A Fed rate cut doesn't have an instantaneous impact on mortgage rates, but that news tells you what's coming, right? So if you look at, the yields, and if you look at Fed rates compared to mortgage rates, and you look at a chart, they're definitely in line with each other. They definitely move together. They're not exact, and there's certainly a difference between the Fed rate and mortgage rates. But as the Fed rate goes down and as it goes up, mortgage rates kind of do the same thing. However, there's a lot of other things impacting those mortgage rates. And so the reason why I think right now is such a great opportunity for home buyers, and especially home buyers that are going to be buying long term. Okay, so anyone that owns real estate, the best benefit of real estate is as a long-term vehicle. Short-term, owning it a year or two and then selling, or flipping, or rental properties. I'm not necessarily talking about that right now. It certainly can be beneficial, but you can also get stuck from a timing perspective where the market, because of how slow moving it is, doesn't move quick enough. So if you're a home buyer and you haven't yet bought, or you're an owner and you're thinking about upgrading, and you're looking in at least a several-year window, let's call it a 4-year window, maybe a 5 to 7-year window. Long-term right now is probably one of the best opportunities to act that I've seen in a while, and I want to break down and explain it why. First and foremost, our interest rates have started to soften. We know historically that when interest rates drop, prices rise, okay? When we look at the massive appreciation that we saw during COVID, we saw 30+% annualized appreciation in Tampa Bay. We saw that it was massive, right? We had interest rates at record lows. Well, the last few years, we've been kind of very stagnant. We've been hovering around these high rates. We've seen reduced home sales. And even in January, we still saw low home sales, but there were a lot of other factors with that. But the point I'm making is that's the opportunity. That's when you want to act, okay? It's like if you know information like in the public markets. Let's say that you're investing in a stock and you learn information about it that makes you more optimistic about its growth. Well, that's the same thing that's happening in real estate right now. A lot of the data and information is aligning to be very optimistic for future gains. So first, I already talked about interest rates and the importance and how those impact. The second part of that is the fact that Florida is going to see major property tax relief. The majority of real estate buyers and sellers in this country operate off of a payment schedule. They're paying way more attention to the payment than they are necessarily to prices. But when payments get reduced, aka interest rate drops, or we see drops in insurance, which we're not likely to see, at least much of, and drops or massive drops or abolishment of property taxes, those payments get really reduced. And so when those payments drop, it opens up affordability for more people. More people can qualify if their payment is lower because their tax escrow is less because they don't have to pay tax or they have a reduced tax. Okay, there is definitely movement that is going to make major property tax relief in Florida a thing. How much of that it remains to be seen, but by 27, I expect it to happen. And what we're going to see is a massive drop in payments, which is going to cause more buyers to flood the market. And what happens then? Prices rise. We see all this data and information, and we know it's coming. That's why I think now is such a great opportunity for people that are going to upgrade their home. They're going to sell and then buy, or of course they're going to buy a home that have been sitting on the sidelines, because I believe the information and everything coming out says that the next several years of real estate market is going to be way better and see more appreciation than the last few years have seen. If you look at our average sale price, we did see a bump up in January, but it's really been pretty stagnant the last few years. It hasn't changed much. It's changed basically with inflation and kind of matched that. We really haven't seen much appreciation, at least in our core, average markets. If you talk about the luxury market, completely different conversation, because we've definitely seen appreciation there. So back to what I was saying. In addition to the interest rate cuts and the likelihood that payments get reduced with some property tax relief, people are starting to act ahead of that, right? They know that this happens. So if they buy now, then they get the benefit later on of the tax relief, which will cause prices to rise, and the benefit later on likely of a much more dovish Fed that is going to cut Fed rates and move interest rates down. How much remains to be seen. Obviously, how long the Iran war lasts will have an impact. There's a lot of things will have an impact, but most people are predicting that we're going to see some interest rate cuts this year, next year, which means payments get cheaper on both taxes and mortgage, which means prices historically rise. So, a consumer that acts today, whether they're moving up and they buy that more expensive house, or whether they're buying a home and they don't presently own one, that gain in value they're going to get the benefit of. And then later on, when the tax benefits, kick in, their payment drops. And of course, they have the ability to refinance when rates drop even more than where they are now, which is expected. Now, I want to talk about a couple of other reasons why I'm very optimistic about the next couple of years in real estate, and why I believe, again, the next 4 to 6 year, track is going to perform way better than the last several years. Those points are solid, but there's some other things happening. First and foremost, the president has used $200 billion from Fannie and Freddie to buy mortgage-backed securities, which dropped rates. This is a pro-business president that has a strong background in real estate and finance, that understands the importance of people's homes and value. He is going to juice the market. He is going to influence the market. Whether you like it or not, whether you think it's pure capitalism or not, he is going to. I'm obviously optimistic about that. The second thing is you've got the next several months where the Senate and the House still have majority. We don't know if they will after the midterms. So they've got a few months to pass some pro-real estate legislation. There have been multiple acts and multiple propositions that are being put forth in the Senate and House that would eliminate or reduce hedge funds and their buying capabilities. The president is talking about taking Fannie Mae and Freddie Mac and doing an IPO and raising funds and making them more of a public enterprise. Those are obviously very optimistic. A new Fed chair in May, likely not an instantaneous cut in rates in May. It'll take a little bit of time. There'll be scheduled meetings. There'll be kind of a politicization of that process and kind of regrouping. But I suspect that in the second half of the year, we see some cuts. And then in addition, you've got a Treasury Secretary that is, adamantly focused on improving the real estate market and improving affordable housing, improving reducing regulations on new construction so that more inventory can be created, improving some real estate finance things. All of those things are heading in a direction that they're going to juice the real estate market and improve it. Now, again, skeptics say they shouldn't be doing that and they should let the market, do what the market does. But there is no question that those things are happening. And so I believe there's going to be legislation passed this year that improves the real estate market. I believe that Trump is very focused on improving rates. I believe he has a commitment from Warsh that rates are going to get pushed down, or he wouldn't have put them in place, even if he doesn't want to say that. And then, of course, the natural market things in our state, reduced property taxes and interest rates heading in a downward direction. But I think there's one more thing that I really want to focus on here. And as a 20-year real estate agent, 20-plus year real estate agent, also involved in the mortgage business, there is inefficiency in the mortgage business that will allow, I think, some pressure and some improvement on fees and costs. The president has made it very clear he's pretty anti-big bank. Okay, he's come out and sued J.P. Morgan. He's come out and tried to put ceilings on interest rates on credit card debt. He's also come out in favor of crypto and that industry against the banks in terms of yields. The president is very focused on benefits for the consumer and not as much so benefits for the bank. And guess who makes the most money in the mortgage market? The big banks do. So I believe the president and the administration are going to be very focused on improving real estate that will have a massive impact over the next several years. So do I think we're going to get to 30% appreciation in Tampa Bay? No, I don't. But are we going to get back to seeing some really significant appreciation above inflation? I think so, with all these factors. So if you're a home seller that's going to sell to move up, if you wait and prices go up, you lost. Okay, even if you're moving up, and let's say prices go up 10% and you're in a cheaper house than the one you're going to buy, you lost money. If you're a person sitting on the sidelines waiting for the right opportunity, the majority of the people waiting for the right opportunity, guess what? They wait forever because they're not really good at judging the market. They're not really an economist. And even the big banks and financial institutions that pay analysts billions of dollars a year, they get it wrong. So don't think that you can time the market and know better. What I can tell you is all the trend is moving in the right direction. Could that mean appreciation doesn't start really kicking for 6 months? Maybe. Could it take a year? Maybe. But if you're buying over the next 4 or 6 years and you wait, you are going to miss out. That's my take on it. That's what I think is coming for Tampa Bay real estate. I think it's going to be, I'm very optimistic and bullish about where the market is going over the next several years. And the data is all pointing to, some governmental influence, some rate cuts, and some property tax relief. And to top all of that off, we're another, few months past, horrific hurricanes that we had. That's probably the only wild card in all of this that could risk the Tampa Bay real estate market suffering a setback would be another really active hurricane season with massive storms that do, hundreds of millions of dollars in damage like the last two did back to back. So if we have another clean hurricane season, our real estate market is going to absolutely crush it. And I'm going to feel sorry for the people that waited to buy or that waited to sell and then buy because they're going to miss out on some massive appreciation. So we're back, continue this conversation after a quick break.
Back to the Duncan Duo Radio Show, the official real estate agents of the Tampa Bay Lightning. Top team in Tampa Bay, over $3 billion sold and counting. Now your host, Andrew Duncan.
So I want to talk about the luxury market next. I teased this a little bit in the first segment where I kind of gave the first segment, I focused really on what's happening in Tampa Bay real estate over the next few years, in my opinion, based on all the data, what's happening in the government, what's happening with, politics, with our state, with, proposed reductions in property taxes, interest rates, all of that. But I want to talk about another segment of the market, because when we talk about real estate, one of the things a lot of people miss is how the markets are kind of like segmented off into different trajectories. And when I talk about luxury, I'm talking about homes above $1 million. In some areas of Tampa Bay, $1 million is average. So in those areas, it's probably more like $2 million. I'm talking about coastal stuff, okay? Because that's where a lot of the biggest, the most valuable real estate in Tampa Bay is. So the luxury market operates much different than kind of your average core market. You're dealing with affluent individuals that have cash, that have money, that that really aren't operating off of a payment, and where interest rates don't matter as much. Okay, so I'm very bullish about luxury real estate market in Tampa Bay for reasons not really related to interest rates, even though they have an impact. but more related to some kind of geopolitical things as well as some things happening in other states. So I want to talk about those a little bit in terms of how they're going to impact the luxury market moving forward. Our luxury market, I believe, will outperform a lot of luxury markets across the country. One, first and foremost, luxury home buyers are very focused on taxes. They pay attention to their taxes. They look for creative ways to save on taxes. They hate taxes, okay? That they just do. They feel that they're a waste. They feel that they give money to the government and the government blows it on dumb stuff. And so they're very focused on taxes. The second thing is that they're focused on is pro-business, pro-growth environments. And so I believe Florida is going to continue to be an attractive place for the luxury real estate market. We're seeing it in South Florida. We're definitely getting some trickle of that into Tampa Bay as our luxury market is improved. And it's really a few things. One, no state income tax. Other states across the country, especially states that have typically been states that a lot of wealthy people live in, are enacting policy that is very anti-wealthy people. Wealth taxes, increased sales taxes for people above a certain income, including California propositioning almost like a stealing tax where they take a portion of your wealth, even including not liquid wealth. Like if you own a company, they want to take a portion of it. So while those things haven't passed, the fact that they're being discussed is moving people here. Okay, we just saw Zuckerberg bought a mansion in South Florida. We've seen multiple hedge funds like Peter Thiel moved his company to South Florida. We've seen these huge billionaires leaving California and New York because the environments aren't pro-business. The environments are anti-business and very pro-tax the wealthy, and they don't like it, okay? So we're going to continue to see our luxury market benefit from those things as long as we avoid hurricanes. Okay. So now, does that mean every single person that's a billionaire or multimillionaire is more focused on taxes? No, but there's enough of them that feel like the draconian responses of the budget deficits in some of these states is simply stealing from them. There's enough of them out there that it's going to continue to bring people to Florida. And so here's what happens. If some huge billionaire moves to Florida and launches his business or moves his business here, it can't all operate in Miami. They may move to Miami, but they've got a private jet and a helicopter. They can go back and forth to Tampa. They'll have operations in Tampa. Tampa will get some business benefit from billionaires moving to Miami. The other thing that's happening with our luxury real estate market that I think is important, in addition to the political things happening, we're a couple years post really bad hurricanes. Now, those really bad hurricanes spook a lot of people. They spook people wanting to start their business here. They spook people wanting to live here. However, mathematically, really successful people have analysts and they can do the math. The statistical probability of one of those storms hitting us again is pretty low. So you're seeing them understand the math and the risk behind that and being more likely to move here now that those things have happened. Okay. So there was a fear of moving here when we hadn't had anything for a long time. Okay. Really successful billionaires operate off of risk and math and probability. That's how they run their businesses. So the risk or probability changes when you've had a couple of those big storms hit. The likelihood of that happening again soon, especially back to back, is very, very slim. So now that it's out of the way, it makes them less resistant to moving here. So we're going to see more wealth come into Tampa Bay. We're also seeing development adhere to wealthy people. We're seeing these amazing developments happening. You've got Marina Point. You've got you've got the Pendry downtown and some of the developments happening on Water Street. They're really catering to a different clientele. You've got a more luxurious approach to downtown Tampa with, higher end restaurants. You've got the coast of Pinellas County being rebuilt because of the storms. A lot more modernization of architecture. A lot of those trends that are successful in California, you're seeing coming here. So all of that being said, our luxury market is going to operate at a higher level and going to outperform our average market in the interim because of all of those things. And I want to say this too, because interest rates, while they don't affect the purchaser of the high-end real estate, there is a trickle up effect. So for example, the guy that's selling his $1 million house to buy the $3 million house, so the $3 million guy can buy the $7 million house, so he can buy the $15 million house. There's a transaction at the very beginning of that chain that does where interest rates do matter. So when interest rates drop, that first transaction helps create a domino effect that does impact affecting the luxury market. That it's not instantaneous, but it does have some impact. While the consumer, buying a $10 million property isn't as focused on interest rates, that transaction may not happen if there isn't a domino effect of the $500,000 guy that's selling to buy the $1 million house. Okay. So interest rates do impact it, just not from the same perspective. So hopefully that makes sense. Obviously super optimistic about the luxury real estate market, but there's one part of it that I want to talk about. If you're a luxury buyer or seller right now and your agent isn't finding off-market opportunities, I want to apply for the job to help you. Our team has a group of people as well as AI helping us find those opportunities, navigate through our database, navigate through public record, reach out to those consumers. So if you have something that's a niche where you're having a hard time finding it, or maybe your agent is only using the MLS. I call it the lazy agent using the magical MLS printout for sales. If that's all you're getting, you need to be with an agency that is aggressively looking for those off-market things. Please give us a shot at theduncanduo.com or shoot us a text with what you're looking for at 813-359-8990. Some of the best luxury. I showed a $20 million property this weekend, open waterfront, incredible property. And some of the best opportunities never hit the market and just happen from those types of events or having the relationships with wealthy people. We would love to apply for the job. Again, you can text us at 813-359-8990, and we'll be back after a quick break.
And we're back with the Duncan Duo Radio Show. Tampa Bay's #1 real estate team. Over $3 billion in sales, thousands of happy clients, and official partners of the Lightning. Now your host, Andrew Duncan.
I was talking in the last break about the luxury real estate market in Tampa Bay and how a lot of the best opportunities sell before they ever hit the market. If that's you, if that's something you're interested in, if you're having a hard time finding it, your agent isn't bringing you those opportunities, you might have a lazy agent that isn't using the tools and resources available today. So you can text us 813-359-8990 or call our office and get to our team that will help scout those off-market opportunities. But what I want to talk about next kind of aligns with that. It was kind of funny. So I have a client that kind of gave us a description of what he wanted, and there's like 3 of them that exist in South Tampa. And gave us a budget of up to $20 million. And, he, went out and we looked at one of the options, one of the 3. The homeowner responded to us and had some interest. It was funny though at first because my assistant Jesse reached out to the homeowner to try and get an appointment. The homeowner thought it was like an AI text, and he was like, leave me alone. And it wasn't. It was actually a real person. Now, we may use AI to find the opportunities and get the information. And certainly we have AI texting and AI calling enrolled in our business. But when we're doing some of the higher end stuff, we're really not relying on AI. We're still doing, kind of the relationship, calling, texting. It may help us, but we're not using the communication tool because people are kind of tuned out by it. But I talked to my team this week about changes that I think are coming to real estate from AI. And I'm an investor in, multiple AI companies. I'm a big believer that it's going to improve productivity, and it's going to, have a massive wave of production improvement and it change how our employees work. However, at the same time, it is going to cause companies to change how they're staffed. In the real estate business, I've said to my agents many times, I don't think AI is replacing real estate agents. I do think the agents that effectively use AI are going to replace the ones that don't. So, I talked to my team about this. I think AI can certainly help improve operations, maybe replace some administrative and operations staff in some real estate companies. But the key to this is you have to understand, the productivity and the performance improvement of AI while also not overdoing it. I think there's going to be a resistance to AI in that consumers are already starting to get numb to the robotic calls and text messages. And at some point, there's going to be a benefit or a perceived benefit of not having to deal with AI at all. And in fact, I saw that with the customer this week that's the owner of a $20 million house. He was resistant to communicating with AI. It annoyed him, right? It'll take a while for that barrier to break down and for AI communication to get good enough to where people aren't as annoyed by it. And certainly, I also think there's a demographic approach to this. Someone my age, in their 40s, in their 50s, and even older, may be very anti-AI or anti-communicating with AI. But the more normalized it becomes, the more normal it will be for the 20-year-olds that get to 30 and 40. And it'll just be a normal part of life, kind of like, texting on their phone or FaceTime or TikTok was several years ago, where you would have people my age that were very anti-TikTok or TikTok or anti-Snapchat, right? The same thing is coming with AI. It will evolve into a tool that a lot of people get a benefit from. It will massively change the economy. It will improve productivity. But there are some people, their jobs are going to get lost if they don't improve, if they don't either improve their skill set or learn to embrace and use AI to improve the service that they offer. So that's kind of my take on AI, but I do think it's going to have an impact on the real estate market. There's going to be some new models. There's going to be communication standards that change, and there are going to be, there's a wave of, new tools rolling out so quickly that AI is going to change those things. So I talked in the first segment about the impact of some of the Trump policies. One of them I want to talk about next, though, is I think kind of a nothing burger. It riled a lot of people up and got a lot of people excited. But the reality is that it's going to have very negligible impact, and it's the administration attempting to ban or reduce the amount of homes being bought by hedge funds for rental purposes. Okay. So there's a stigma out there that all these home buyers are losing out to hedge funds and to institutions. And, that's about 2019 news. Okay. That doesn't happen anymore. I don't get offers on my listings from hedge funds. They're not out there buying homes, turning them into rents. Okay. The math doesn't math. It doesn't work. Okay. The institutions can't buy real estate in our markets with taxes and insurance where they are and make money. It just doesn't make sense. They're not doing it. So are there parts of the country where maybe it has a little bit of impact? Maybe in Arizona or Nevada, areas where there isn't flood insurance or areas where insurance isn't as expensive because there aren't as many, impacts on, potential impacts on property damage. Maybe. But the reality is for our market, this premise that home buyers are losing out to these huge institutional investors just doesn't exist. It's a nothing burger. Now, did it a few years ago? Absolutely it did. Are there institutions, however, that buy, renovate, and resell homes? Yes, there is a lot of that, okay? There's a lot of institutional money behind that, but that's not what Trump's EO is going after, and that's not what Congress and Senate are going after. They're going after the landlording. They're going after the guys that are buying and hoarding inventory and renting them out. Because the reality is those homes that need work, that get bought, renovated, and resold, the regular consumer can't buy those anyway because they don't have the money. They don't have the money to make the repairs, and they can't lump a lot of the repairs in. There's always going to be an audience for investors, even institutional investors, to buy and renovate and resell. Okay, that's not the attack. That's not the place where they're attacking. Because the reality is those homes, and look, I buy a lot of them myself. I bought one last week. I've got one going on the market this week. I'm always buying homes that need work. If you're a homeowner and you have a home that needs work and you just want out and you don't want to deal with one of the large institutional funds, we help with that. You can go to DuncanDuo.com. You can get a quick cash offer. We're much more flexible than the funds. We're a local institution. We're using local money, putting money back in our local economy, hiring local contractors for repairs, improving communities. You can do that at DuncanDuo.com. You can get a free cash or an instant cash value. Obviously, we don't charge you for the offer, but you can do that at DuncanDuo.com. So, but what I'm saying though is that you have these institutional investors that still will buy, renovate, and resell because, until or unless the administration does something to allow, to make it easier for somebody to include renovations in their mortgage, the majority of people don't have the cash out of pocket to spend to make those repairs. Now, are there loan products out there that will allow them to do some things? Yes, at a higher rate, at more hoops to jump through, at a higher cost because they can't control it. So of course there are some things that will allow a consumer to buy a home that needs work and include the renovation and the mortgage, but they're relatively limited. They're more expensive, and it's why there's always going to be an audience for people to buy and flip real estate, including large institutional investors, because they're not really competing with consumers at that point. The consumers that can buy that's not the consumer President Trump is really targeting. The majority of those consumers can't buy that product. So anyway, so talking about the landlording, and it's simply just math. With taxes and insurance where they are in our state presently, we got some relief coming, hopefully, on property taxes. We got maybe a little bit of relief, Governor DeSantis says, on insurance. But with the taxes and insurance where they are, those institutional landlords can't buy and rent out properties without losing their tail. Okay, they lose money, so they don't touch our market. So I saw someone not long ago like celebrating, the Blackstones and the hedge funds, and they can't buy. We're gonna rule them out of buying homes. The man haven't bought since 19. It's been 6 years. Like, they're not buying anything. So I don't know what these people are paying attention to, but I look at the real estate market, the data and the stats every single day, and the institutions that are buying to rent just don't really exist in our market. The only place they really exist would be buying apartment buildings or buying and renovating, duplexes. And there's some of that, a very little bit. So that's one part of the information that's come out from the administration. It's pretty much a nothing burger for our market. Now, does that mean it will always stay that way? Maybe not. I mean, they pass this, and maybe 3 years from now, if we get tax insurance relief and we don't see storms and rents rise and we get more people moving here, then maybe it's a benefit to have locked that in. But right now, it's pretty much not impactful. When we aren't on air, make sure to follow us on all of our socials at The Duncan Duo, Twitter, Instagram, YouTube, TikTok, Facebook, always putting out relevant real estate information about what's going on in the marketplace, putting out videos, putting out properties that we have listed, putting out even off-market opportunities where we have a home that we know about. I had a client this week that called and said, hey, I've got a waterfront lot. No one knows about it. I don't really want it on the market. This is someone, relatively well-known. Who do you have that can buy it? And a couple phone calls later, and I've got a builder ready to buy it. So those are the things that we can do. We can make connections. We can make quick sales happen at a very fair and reasonable price. In that situation, it was just a customer that didn't want to deal with the hassle. And so there's a lot of discussion being had right now about the off-market and pre-listing showings. You've seen huge real estate brokerages sue the portals like Zillow. You've seen alliances between real estate brokerages to try and change our industry and allow the consumer to have choice, because a lot of the MLSs and Zillow are putting restrictions in place about how we're able to market homes without putting them on the MLS. So I think, again, that's one of the things that I expect to see massive change in the real estate industry over the next few years. I think we're going to see a movement of customers. They're going to want more of a concierge service, especially in the luxury market, where maybe they don't want their house on the market with everybody. They want to tell a few realtors and say, bring me a buyer, I'll bring you a commission. They don't want to go through the hoops of having their home shown or a sign in the yard and people learning that they're moving. People naturally, maybe, especially in those higher price ranges, want that privacy. So I think this litigation that's happening in real estate is going to play out in the favor of consumers that want choice. I'm a very pro real estate, pro home value, pro home seller, but I also think that our industry has this egotistical belief that it knows better than the consumer. We can't gatekeep the information anymore. For the longest time, the real estate industry was able to gatekeep the data, the MLS, the information. It was ours, right? Now everybody has it. Now AI has it. Like, we can't gatekeep the data and information anymore. What we can do is provide a better service and adapt to provide the service our client wants. An industry that attempts to tell the consumer that it's smarter than the consumer in an age where technology is catching up to become smarter than humans is an industry that just needs reform. So I think we're going to see some massive changes where there's going to be a lot more options for consumers to have choice about how their home is marketed versus the standard, it's got to go in MLS in a certain period of time. I think that's just such an old school thing that is going to get the you-know-what beat out of it in court when enough consumers don't want that and resist it, and enough agents see the benefit for the consumer. And look, sometimes Of course, the argument is always, well, massive exposure means more money to the home seller. You've lost the locker room if you think that's all home sellers care about. They care about convenience just as much, if not more, than net profit and money in their pocket. Or else, why would so many home sellers sell to, the institutional investors, or sell their home to me, or sell their home to somebody that's going to make a profit on it? The consumer isn't about net profit, okay? The consumer is about choice. The less that you stop attempting to tell the consumer what's right for them, the better our industry will perform, and I think we're going to see some massive change coming. So if you're a real estate agent thinking about a change, thinking about whether you want to stay where you're at, or you want to grow, or you're someone that's thinking about getting into the real estate business, I'm talking to you. Hang tight. I'll catch you on the other side to share some more information about what we're doing at our company to help real estate agents grow.
Back to the Duncan Duo Radio Show, hosted by Andrew Duncan, official real estate agents of the Tampa Bay Lightning and the team that guarantees your home sells with ease. Visit theduncanduo.com right now. Here's Andrew Duncan.
So if you're a real estate agent and you're frustrated, maybe you aren't getting the results that you want, you're thinking about a change, what you were promised by the broker or team you're with has misled you. You're seeing your business fall off. It's no secret that the real estate market has massively changed. People that were successful a year and two ago aren't right now. January saw low home sales. I increased my advertising expense in January and all of last year. I'm unafraid because of the 20-year track record I have, and fortunately, the piggy bank of money I've built over my career to be able to reinvest in the business when a lot of people are cutting they're cutting their marketing expense, or cutting down. So we're in growth mode. I'd love the opportunity to have our team, Kat from my office, talk to you if you're thinking about a change. If you want an environment that is very pro growth, that can help you improve your career, that can help you sell more homes, but most importantly, help you make more money. So a lot of real estate agents get focused on the wrong things. I was talking to an agent last week at an event, and they said, I looked at joining teams. I looked at joining your team, and I just can't justify the split, okay? And meanwhile, in our split at our business, we're doing all the lead gen, providing office space, providing all the tech. We're providing all the coaching. We're providing transaction coordination on all of our transactions. We do the marketing on the listings. We do the photos. We do the syndication. We pay for the syndication to all the websites. We're incurring all these expenses so that our agents can focus on selling, and our agents outperform the market massively. So I said to the agent, what's more important to you, the money that you bring home to your family, or the split that you get to tell your friends that you're on at happy hour? And I looked them up, and they did 4 sales last year. They would have done quadruple that on my team because they're a hard worker. So if you're out there and you're not making the income that you want, and you're focused on the split, you're focused on the wrong thing. Okay. You're focused on, you're not focused on the money you bring home to your family. You're focused on ego. Okay. And so if you're a real estate agent and you're not making those sales and you're not hitting the numbers you want to make, you might want to blow it up and start over and think about a new strategy of how you look at business. And I broke it down for my team this week. I do a Wealth Building Wednesday class where I teach my agents things that I do in my life to make money or create wealth. And I was talking about investing in private equity and pre-IPO companies this week. And in the pre-IPO and private equity space, you're going to pay a higher fee than if you go online and buy a stock on Ameritrade. The reason you're going to pay a higher fee is because you're going to make more money. The person that's bringing you that opportunity knows how hard it is to get into that company, so they charge a carried interest or a fee to be able to get you access to it. Okay. Some of these opportunities, I've got investments I've made, including one with the hat I'm wearing today, that have 10x'd in a few year period. Okay. You're not getting that on, a stock unless you get lucky. So the point I'm making is that you get what you pay for. A lot of real estate agents go to the discount company or the company that's offering them the lowest split, and then they don't make any money. And then they want to know why their broker isn't calling them back. It's because their broker doesn't make any money either, because they charge you nothing. They're not able to give you service. They're not able to have staff. There's no margin there. If you're not operating within a brokerage that's profitable, that's able to provide you services, you're going to fail and succeed because no one's going to teach you how to get better. They're just focused on headcount. So if you want somebody to coach you to build wealth, to become a better agent, to sell more real estate, to generate leads for you, to take the transaction stuff off your plate, we're for you. If you didn't hit the income that you wanted and you're attached to the ego only, and you want your name on everything, but you did 3 sales last year and you're not willing to think about things from a new perspective to grow, you're probably not the right option for me. There are agents out there that with our help would make massively more money because they have the work ethic, but either they don't manage the transaction well, or they don't know how to create the business, or they're not coachable, okay? If you're not coachable, we're also not for you. We know that we can coach agents to make massive production. I've had agents that have worked for me for years and gone out and built $1 million teams on their own because of what they learned in the environment that they get from my team. So you're not going to be able to recreate that on your own, very likely. It's why so many people start on teams. So if you're not hitting the sales that you want to double or triple your income, you want a productive, coachable environment, hit us up. You can hit me up on any of our social channels at The Duncan Duo. You can send us a DM. You can also go to jointheduo.com. At Join the Duo, you can apply directly for any of our open positions. You can also register for a career night or hit us up for a one-on-one consultation. Again, you can do that at jointheduo.com. And again, who I'm really talking to, if you want to double your income, okay? If you want to look at real estate from a new perspective, if you want to be coached by somebody that's created massive wealth, if you want to learn from that person, we're the environment for you. If you think you're going to figure it all out on your own after you did 3 or 4 sales, or maybe you've been doing that same number for years, the definition of insanity is doing the same thing over and over again and expecting a different result. If you're not hitting the income that you're wanting, but you're not changing your environment, you're not changing your approach, you're not changing your marketing, you're not being coachable, you're probably not going to win, okay? If you want to win, you've got to get around the people that are winning, get around the people that can help you grow, get around the people that can help you generate the leads, and that's what we offer. So we are in growth mode. We are looking to add some agents to our team. I'm not looking to add 30 agents to my team, though. I'm looking to add a few, because I want to make sure that we can give them the proper approach and focus, because I'm not trying to be a mill. There are teams out there wanting to have hundreds and hundreds of agents. I want to go deeper with my people. So I'm not looking for hundreds and hundreds of agents. I'm looking for a handful of productive people that want to be coached and led and that want to grow their wealth and learn alongside us. We actually just rolled out something this year too, where we allow our agents to invest in the flips that we do. In addition to them selling real estate, they get to learn that side of the business. They get to invest in an investor that has made millions of dollars investing in flips, and it doesn't lose very often. The times we lose are from hurricanes. That's about it. So if you're interested in that, again, jointheduo.com. Hit us up on any of our social channels. I'd love to talk to you about a real estate career. And we appreciate you tuning in and hope you have an awesome rest of your weekend, Tampa Bay.